The outlook and fundamentals for the metals remains very, very strong.
Hello, everyone, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and today we are joined by the president of goldseek.com and silverseek.com, Mr. Peter Spina. Great to have you on the show.
Thank you, Jesse. Thanks for having me on.
Awesome to have you here. I want to start with a statement you have pinned to your Twitter profile, and that is this: you do not buy gold to make money, you buy gold to prevent losing money. Now, for those of us in the precious metals community, we know exactly what you're talking about, but for those who are maybe new to the space or who think that sounds contradictory, could you expand on that for us?
Sure. I think it's important for those who buy gold to understand that you're buying gold more to preserve your wealth. That when you look at the gold price and you see the price of gold going up, say in US dollars, the gold price is 17 going up to $1,800 and so on. It's actually not the gold price going up. It's the value of the dollar going down. So it's gold is a constant. It is the measurement stick in the monetary world. And yeah, you do have some inflation rate in the gold supply of 1.5% a year, but overall it's minimal. So really, gold provides a way to measure other currencies. So when you are buying gold, there are times where there are opportunities where the price is undervalued or overvalued versus that currency. But overall, the reason you buy gold is to preserve your wealth.
Right, that makes perfect sense. So I want to ask what you see as some of the main tailwinds that could be working in gold's favor as we move into 2023. Is it the fact that, currencies around the world are being devalued? There might be a bear market coming here for the US dollar as well. I've spoken to people who predicted that. Or are there other things as well that you see working in gold's favor here?
Well, gold really thrives in an environment when we have stagflation, and that's really looking like we're entering that phase. Although the inflation rate may have peaked, it's still quite high, even if it's coming down from a CPI rate of 7-8%, which is almost 4 times the Fed's inflation target. It might be coming down to 5.45%. That's really that's a very high inflation rate. With the economy doing what it's doing, there's some fear that's going into a contraction, into a recession, even if it's near break even, slow growth. That's that stagflationary environment where you really see gold thrive. So we're going to see, I think, that come more into play. And in that situation, investors are looking around. Where do I put my capital? Where do I? Maybe it's not about making money anymore. It's about, again, preserving your wealth. So housing market's not looking good. The stock market has really high valuations. The bond market is iffy. So there's a lot of overvalued assets, and gold really sticks out and shines. There are some very strong fundamental drivers behind the gold price. We see record gold buying taking place by central banks. They had about 400 tons of gold the last quarter. Now that's the highest amount since I think it was the late 1960s, when the US dollar, it was a gold dollar still. So, in international markets, the dollar was still backed by gold. So we've gone from a total opposite situation from the late 90s, early 2000s, where central banks were dumping gold on the market, to now where they're buying gold. It's quite amazing in today's world where, they used to make fun of gold on the media as a barbaric metal. Jay Powell was asked about gold, and he called it a speculation. Well, why are central banks loading up on it? Because they view the other national currencies as a higher risk, and they see gold as a safe haven and as a way to shore up their balance sheets, which are having huge losses accumulate. So gold has that on its side. You do have a lot of investment in retail and strong demand coming in as well. You do have the ETFs, which we've seen fall off, some selling. So that's kind of muted some of that demand. But once we see the ETF that start to flip, that's really going to drive prices. Inventory of gold is falling. Same thing with silver. So you have more, the lower inventories and more of a price squeeze can develop. So gold has those things in its favor. In the coming year, there are other geopolitical risks and at play. Obviously, a very major war going on in the Ukraine, which is it's not your typical proxy war that we've seen in the past. This is a direct confrontation between the West and Russia. And we've seen it develop into and escalate into a very bloody situation. And also the war has spilled over into the economic, financial, monetary side. So how does gold come more into play? Will Russia use it? Will the BRIC nations use it to back a basket, use a basket of commodities and gold to back their currency or some new trade currency? So there's a lot that's been discussed for a long time, but finally I think the trigger has been pulled, and now we've entered into a very uncertain period, and uncertainty does drive interest more into gold, the fear of what's coming next. So those are some of the primary ones, and gold is definitely being recognized again in the media. It's had a difficult few years. It didn't react as much as it should have to the inflation rate, and now we're seeing a lot of the other assets that were chased after are no longer being chased after. So gold really sticks out there, and I do believe it's going to get another push into the $2,000 plus level in the coming quarters. I'm just not sure on the timing. It does look like we've ended this 8-year cycle low in gold recently. So I think the lows are in for gold. It just is this more of a consolidation period for the next quarter or two, and does it take off, or is it go time? So my view is any pullbacks right now are excellent buying opportunities, as long as we don't see those prior lows taken out. And that's still one potential. If we saw just a mass deflationary spiral take place, that there is that potential there. But in a deflationary scenario, the relative value of gold will still be expressed quite strongly, and it will outperform other assets.
So what about silver? Because, it's got a long history as monetary metal. It has a lot of industrial applications. There's a lot of talk these days about its use in photovoltaic solar panels and that being like an additional demand driver. Do you think silver will continue to be perceived as money moving forward, or do you think it's going to, fully move over into the industrial commodities camp? And what are some catalysts you're seeing in 2023 for the silver price?
Well, there's still a lot of investment by retail and institutions into the silver market around the world. We've seen India recently just seen a massive, I think 300 some million ounces of silver being imported, a huge spike. So they are moving into silver more. I think also as part of the silver story here, crypto, which really distracted and took away from the retail investment side of the investors, was chasing that. Now that's kind of blown up, so they're coming back to, I like to call it the OG altcoin, which is silver. Now it is an industrial metal, and it has that. It's a very strong influence and dynamic of that price. But the main driver in the end that really throws the market into a potential short squeeze is the investment side, and that hasn't gone away. There's still a lot of people all around the world that view silver as money. But it does have a bit of a branding change taking place. I've seen some banks talk about silver being one of the hottest green energy metals. So with the green energy transition, that also gets less of a dirty industrial metal, but more of a part of the green revolution metal. So that's kind of positive branding, especially to the younger generation, which really doesn't like commodities or metals or mining, but they do love electrification and all these other things. So I'm really interested to see if we're at that tipping point now where the younger generation is going to start coming back and get educated more on these metals, and silver will benefit, I think, a lot from that. And the upside is a lot higher than the gold price. I think it's got lower, the risk reward is much higher for silver. It does have the potential to fall. We've had a nice run up, and it's more volatile. But we've also seen a very interesting dynamic in the silver inventories. They've been falling very aggressively. So when the silver price falls, it just drains the inventories faster. I think China coming back online in 2023 more fully without the COVID restrictions is going to help on the industrial component. And then if we do continue to see strong retail buying investment, then the silver price is set up to do quite well. I think around low 20s is a very supportive market. You do get there was a huge attempt to short the metal, and it got below 20 there, but it was mostly shorting. And it was even like TD Securities, they took a massive loss on it recently, and others who have tried to short it at near the bottom, and they've gotten burnt heavily. So I don't think they'll be as aggressive here. And I think we're starting to see the reverse, that it's time, we're going into a bull market mode. So I think we've hit the lows in silver. It might still be volatile again at the bottom, but if you can get any physical without a huge premium in the market right now, that's the problem. If you can get investment silver here, then you should get it while you can, because when the market gets tight, it sure can, the price can take off, and those premiums on the investment side can really take off. And I would advise though to be careful not to, pay $15-20 over an ounce over the spot price for a physical coin, because that's just that's going to be hard to maintain that return. So otherwise, I'm very bullish on the silver market. Dynamics are in its favor. We're going into a huge supply deficit, a few 100 million ounces. So in 2022 is a really large amount, and then next year as well. So the silver market has a lot supporting it right now, and has that potential to break out. And technically, we break $30 an ounce, and we're off to the races to $50. But for now, it looks like the challenge will be getting to $25 to $30 an ounce and breaking through that. So we'll see how it plays out. But if gold breaks 2000, silver probably has that energy there to break 30. And that just attracts all sorts of media attention. And then you'll see that herd come into this sector. And it's such a small commodity, such a small market. It doesn't take much to move it.
Right. So you're talking about the herd potentially coming into silver, and I think that could also be true moving forward of gold as well, simply because, as you mentioned earlier, the bond market has not performed as a safe haven asset class that everybody thinks it is. The traditional 60/40 portfolio no longer seems to be the way to go to protect one's wealth. So I wanted to ask if you think institutional buying will increase moving forward, maybe over these next few years. What do you think about that?
I believe so. I think they're going to come to the recognition on Wall Street of where do you go? Where do you hide? What do you buy? And commodities have a good case for it. There's a good bull case, but I do wonder, the demand side, if there's economic, a global recession, the commodities will face a little more difficulty. So the monetary metals, in a stagflation environment, the funds will see this. They're going to come into the sector, and with gold, it doesn't take much. There's so much money floating around. It's so under-owned. I don't know the latest numbers, but a few years ago, I think it was 0.25% or something of global assets and is invested in precious metals. Now it's near historic lows. People have chased other things, and there was such a great period to make money in all these different markets, and gold just kind of got left behind. So now, as the situation changes, gold will shine, and Wall Street and that crowd, they'll have this aha moment and realize, I personally, I think there's a scenario coming up where we see the inflation rate come down mid-year, some point, inflation rate starts to creep back up. And then it's like, what are we going to do? We have an economy this week. We have rates already that high. What are the central banks going to do? And that's going to be a difficult question for them. And they're going to have to figure that out. And they're more afraid of deflation than inflation. So they're going to support inflation on some level.
Right. So we were talking a little bit before we hit record here about the government overreach that's going on in a lot of these legacy brand Western countries. We saw the Canadian government seizing financial assets, freezing the bank accounts of political dissidents. It seems to me there wasn't much of an uproar from the people, which was pretty shocking. Most citizens seemed to not really care. A lot of people even supported it and believed that it was actually Nazis and all sorts of insanity, which comes part and parcel with the kind of brainwashing that's been going on in that country through the media. And a lot of countries, indeed, in the Western world are starting to seem to be on the decline. So from a staying outside of government reach and protecting one's wealth standpoint, how important do you think it is for individuals to have their hands on some physical gold or silver in their possession to protect them from this kind of situation happening to them?
Absolutely. I think it's a great, example what the Canadian government did. It's unbelievable that they would do this. From my family side, who escaped a communist country where they had all sorts of problems, they never heard of the government freezing your bank accounts so you couldn't even get money out to buy food if you did something they didn't like. This is next level tyrannical uh, games. And yeah, they were trying. I watched all the raw footage of the protests, and I didn't see any Nazi flags. I mean, they admitted the Canadian secret intelligence agency that this was all made up by the people in power to use it against the protesters who were trying to, gain their freedoms. And it's scary. So whatever the situation that comes up next, what you got to think, how do you protect yourself? What's the next thing that could come up? You don't know. I think in general, capital controls is a big undeveloped topic, something that should be discussed more because it's happening in different parts of the world. Whether, if you're in Argentina, a different, you see it in China, they limit how much money you can get out of the country and converting it. So, if you'll have different situations arise. Now for the gold side, I think gold makes an option, excellent option to protect yourself from capital controls. You don't have to, well, first of all, I think when you say holding gold, you got to be careful how you do that, because just like in the gold confiscation in the 1930s, when FDR overnight released an executive order, made it illegal, which was only within the Marxists and the Soviet Union, or in the communist Russia, they did that, and in the US did, which is unbelievable. They confiscated, made it illegal for private citizens to own gold. But that said, if you had your gold in the bank, in the vaults, that got all confiscated. It was something like less than 5% of private US citizens handed in their gold during the gold confiscation. It's so hard to track. It's so decentralized. It's so anonymous and private. So if you purchase gold appropriately, and there's different countries, different rules, but if you go and buy gold under $10,000 cash, and you don't have to report it to the government, for my parents coming from a communist country, these ideas of having your personal wealth, personal finances, everything being reported and logged, that's just a warning sign that at some point when they want to, they're going to use it in the wrong way. Of course, they always sell it under the banner of terrorism and all these other things, but that's just, to me, giving up your rights. At what point do you become a prisoner? So I don't want to go down that route as much as how do you protect yourself, and gold is a great way. I would also say that it would be advisable to hold the gold in different locations. If you're in a country that you fear could do something you wouldn't like, well, it's good to also just have a different passport, have a different location, and also hold your gold in maybe that different location. Now, if there is another gold confiscation order, they're going to go after the banks again. So if you're holding your gold in a Swiss bank, if that Swiss bank, most likely they will comply. They'll definitely comply if they're established in the United States. The government will threaten them if they don't comply with their laws. So, for any of these multinational corporations, they're all they're going to be strong-armed to, if this another gold confiscation thing were to occur. Yeah, it depends which countries. There's larger threats. Canada, unfortunately, they sold off all their gold. They're one of the few several countries in the world that has no gold reserves. So what will they do? I think they kind of go out. The gold miners may have a situation where they'll be forced to sell their gold to the government and get some local currency instead of US dollars, or some other games. So there's definitely a lot of things to think about personally, and even for the investor side. And it's becoming more and more of a topic with the geopolitical questions in play, and economic. If there's a really severe economic crisis, governments will prevent people from withdrawing their cash too quickly from their bank account, controlling different ways, or get it out of the country. So it's a very important topic. It is something that you have to prepare ahead of time, because these things tend to do happen overnight. So you're either prepared and have a plan in place, or else you're just going to become a victim.
Right. And I think it's becoming more and more important for investors in precious metals, and even in the market in general, to be paying attention to what their governments are doing very closely, because, there's a lot of shenanigans going on. Like we were talking about, Canada feels like the doors have been opened. There was very little backlash. So now it's almost like carte blanche to, okay, what's the next thing we can do, right? So
Yeah.
I definitely see that scenario. Perhaps windfall taxes on, they're already talking about massive windfall tax on oil and gas companies. Your scenario of forcing gold miners to sell gold directly to them at a discount could also come to pass. So we got to keep our eyes open. The VRIC is coming up January 29th and 30th. Tickets are in the description below. They're free. So you guys definitely want to attend if you're in Vancouver, or even travel there. We've got an incredible lineup of speakers, including Peter. So what I wanted to ask is, what are you planning to present at this year's VRIC?
Sure. Well, VRIC is a conference that I've been going to since the early 2000s. I find it to be one of the best conferences to meet with companies in person. And I think investing into mining stocks, it's essential to meet with the management, to get to know them. So that's an excellent opportunity to do that. So I would definitely recommend the conference. It's a lot of great companies and speakers who I've learned over the years from. So I'm looking forward to talking about some of the mining companies that I invest in. I've been investing in mining stocks since 1994, 1995. So I started from a really young age as a hobby investing in the sector. I really enjoy investing into earlier stage, some of the junior exploration stocks, and there's a lot of value right now across the board. I see I've been buying larger miners, which I usually don't purchase, just because the market has gotten so crushed that there's some great, there's some great valuations. It's almost, to me right now, that the difficult question is, which one do you buy? Because there are so many opportunities, so many good opportunities. The sector has been so crushed, so decimated, and doesn't reflect, the current gold price. If gold price is going to be heading higher in the coming year, then boy, it's a really awesome opportunity. So I'll be going through some of those companies that I invest in, and some just general forecasts with the gold and silver sector, and what I see some of the central banks and some of the geopolitical things coming together, and how that influences the gold price, because it really is a confluence of different factors which influences the gold market, the gold price.
Great. Well, looking forward to that. For those who want to learn more, could you maybe tell us about goldseek.com and silverseek.com, and anywhere else you'd like to direct people online?
Sure. Well, GoldSeek, we've been around since 1995, helping precious metals investors keep on top of the latest sector news and the markets. And so come visit us on GoldSeek. We have a lot of different authors that contribute in different perspectives, which is important to try to navigate this very quickly changing environment. Personally, I contribute to the site as well. And on Twitter, it's probably my main social media platform. So at GoldSeek, you can find me and connect with me on there.
Great. I'll put links to both in the description below so you guys can find that easily. Thank you so much, Peter, and look forward to meeting you at the VRIC.
Likewise, Jesse. Thank you. Look forward to seeing you there.
We actually need to have a damn good recession.
The Russian economy is a gas station run by the mafia.
$41 trillion has been created out of nothing.
There's a stranglehold in China on most of these resources.
The outlook and fundamentals for the metals remains very, very strong.